my intro to programming was.
So sorry, Stephen. I can't believe it.
No worries.
I think the record button was not taken. Okay, today is. I'm not even hangover.
No worries.
Sorry, I have to do this again.
No worries, no problem.
All right, cool. And now we are recording. Because I saw that I had to still choose where to record to. Also strange. I feel like that's a new. All right, let's do it.
Cool.
Welcome to another episode of the TOAOA On Air podcast. Today I'm joined by Stephen Young from NFTfi, which is a marketplace for NFT loans, allowing anyone to access the liquidity they need based on the assets they hold. Welcome to the show, Stephen.
Hi, thanks for having me. Excited to be here.
So this is the second time we're recording because I did forget to press the record button. So I'm not gonna ask you the same question around, being in Norway and you giving me the same answer. I will summarize. You're in Norway. You do miss the heat from South Africa, but I think a lot of continental Europeans would have wanted to be in Norway over the last few weeks.
Yeah, I heard it was cooking there.
Definitely cooking. So excited to speak to you today. A few things we'll be covering. One, obviously, what you do at NFTfi, but also, the sort of, future of the NFT space in general, both from a technical perspective, but also from, what you feel like will be future innovations and, more creativity being unlocked in the years to come in the space. We'll talk about the general market and how NFTs and crypto in general correlate with other assets and whether they will eventually decorrelate or not. We will be talking about your personal journey as well as some technical stuff around layer 2s and layer 1. So let's start with how you got here. How did you end up building a marketplace for NFT loans? What were some of the dots that in retrospective brought you here?
Yeah, so it starts when I was pretty young. I started learning to program and draw around the same time. I was like 6 or 7 years old. My introduction to programming was actually Logo, which were basically, there was a little turtle that you would program to move forward, left and right, and you could use it to go and do animations and draw pictures on a screen. So kind of my introduction into programming was actually generative art. In a way, and then I spent a lot of my childhood at doing paintings, entered a bunch of art competitions, and in high school the only two subjects I really spent any time on were computer science and art. I kind of fit everything else in around that, and so always had a love for programming and always had a love for art, and then I kind of at the end of high school ended up becoming a programmer because it was easy to pay the bills then as an artist at the time. And then my career really was in finance. So, so it's art, like programming and finance, so which is like perfect three things for the NFT space. I spent most of my career as a software developer and software architect for, big banks, asset managers, fintech startups, so really kind of in the finance space most of the time. And then towards the end of my career, moved into kind of doing digital marketing and design, like lots of management stuff as well, as I kind of became more and more senior. And then in 2016, when I first left high school, I worked for 2 years in the UK. And in 2016, I worked out that I was earning less in dollars in 2016 than I was in 2001 when I was working in London. And mainly because the purchasing power of the rand had just completely fallen through the floor, and realized there's no way I'm ever going to be able to retire and actually feed myself if I kind of kept in that system. And that's kind of when I started looking around and really kind of got the crypto bug, mostly Bitcoin. I learned about Ethereum also, pre the first mainnet launch, but never really dug into it too deeply. But then around in 2016, started buying crypto and spent the next 2 years trying to convince the asset manager that I was at to kind of take this thing seriously. But there were no discounted future cash flows. So, they just didn't kind of land at all for the asset managers there. And then in 2018, decided to kind of pivot my career and go fully crypto. So as part of that, I left the asset manager I was at. Co-founded an exchange, was there for about 1.5 years, realized that an exchange is basically the same as a bank or an asset manager. Instead of trading units of like a mutual fund, you're essentially trading units of cryptocurrencies, and all the legislation and everything else is basically the same as with centralized finance. So really wanted something that was fully decentralized, without fiat on ramps, to kind of really play full time in the kind of proper decentralized space. And then the end of 2019, I was having a conversation with one of my friends, Mads, who's one of my co-founders, and he was very early in the CryptoKitties space. Like right when first launched, was one of the biggest CryptoKitty breeders for a long time. And we were talking about, I was thinking about taking a maker CDP to fund not working while I was looking for the next thing to build. And his response was, he what he really wants is to be able to leverage his cats to long ether. And I thought that was quite a cool and crazy statement. And then we kind of like started just brainstorming what that would look like. Started working on NFTfi in January 2020, just as the COVID lockdown started. And then I spent basically like 2 hard lockdowns in South Africa building the first version of NFTfi, launched first public loans in June 2020, and I've just been growing ever since.
Amazing. And can you give us some data points sort of around, that growth that you've experienced? Anything you can share and want to share?
Yeah. So we, in 2020, we did around $300,000 in loan volume. 2021, we did 40 million. In 2022, so far, we've done 195 million. So it's been pretty rapid growth.
Yeah. Incredible. And have you seen, like how drastic was the crunch, let's say, that was brought about by, the recent kind of dip in crypto? Does that sort of almost correlate linearly, or?
No, not well. So if you're looking at our US dollar volumes, then yes, because Ethereum drops by 70%, then your USD values also drop by quite a lot. But NFTs are mostly, NFTs in the Ethereum ecosystem are mostly priced in Ether, really. So our loan stats and loan counts are, so this month is on track to be our best month ever, more so even higher than June in terms of loan. So I think May was our highest in USD volume, but this month was likely be our highest in terms of number of loans and Ether. So maybe number of loans slightly lower, but Ether is definitely looking like it'll be our record month. So if you're looking at the volumes in the price that the assets are priced in the market, it hasn't really caused much of a slowdown. There was a little period just after the crash where everybody was just kind of like taking their hands off the keyboard and just doing nothing because they don't know what was going on. But we're seeing big upticks in loan volumes over the last 3 to 4 weeks.
I mean, what was interesting to me also, and I'm not an NFT expert. I don't follow the market maybe as closely as the general, other kind of type of verticals in the crypto market. But it seemed to have held out so much longer, right? The NFT market. Was that a surprise to you as well?
No,
and
I
at
mean,
one point I thought the bottom would maybe be once we see, also, the NFT market kind of take a similar hit. Like that was for me personally, like a little bit of a, maybe an index that we can't have hit the bottom, because people were already starting to talk about like, yeah, this must be the bottom, Ethereum is down, 50% or 60%. And I was like, well, but NFTs aren't. So how can this really be the bottom for the market?
Yeah, so I mean, I think some projects have been wiped out, right? So kind of the new, more crazy speculative things that were just relying on everyone coming in. So I don't know, there's like probably 10,000 profile pictures projects kind of out there. So a lot of them took a big hit, but the real quality assets, actually the floor prices in Ethereum have gone up. So floor prices for CryptoPunks have gone up, floor prices for Bored Apes have gone up. Autoglyphs, the good art blocks projects, all of them actually are now more expensive in Ether terms than they were before the crash. And this is largely because especially on the art side, these things are actually just legitimately good art that are, historically significant in a new art movement, kind of on-chain generative art. So at some point, they actually just become cheap again in dollar terms. So 6 months ago, you couldn't buy a CryptoPunk for less than $400,000. Now you can pick one up for $60,000 or $80,000. So people that were thinking of buying a punk back then, who are sitting on dollars, they're now just snapping them up because they're cheap, which then pushes up to full prices. And you tend to see that actually. So kind of what happens at the bottom of a market is the NFT prices will kind of stay solid to, kind of stay the same on the way down. Projects that haven't shown traction will just, all liquidity will dry up. You just can't buy or sell them. But the really good ones, once the ether has found the bottom, the good ones will tend to kind of hold up or increase their ether prices, because, like I said, they just become cheap in terms of dollar terms. I was looking to go shopping when the prices went down, and they just never really did. So, yeah.
What did you have your eyes on? Like, what do you think are some projects that for you? I mean, I guess you were saying kind of legitimate. I don't know if that was the word you used. Like to describe sort of the criteria to assess the value of artwork in general, I guess.
Yes.
Also offline art, obviously, art in general. But in the crypto space, how much of it is kind of novelty of technique? So the early generative art form. How much is the following and the buzz that the creator can create? How much of it is the, I don't know, influencers picking it up? I'm probably missing a few other criteria, but I guess you have great insights, and probably this is important to you also as a platform, or you don't really care that much which loans are being financed and what the collateral is.
Let's take the platform answer first. So really, the platform itself doesn't actually know the value of the asset, right? Because it's peer-to-peer. It's just a market where people who want to get a loan list the asset on our platform, and then lenders compete to make them bids. And it really is quite competitive on the lending side. So for the top collections, you typically have a offer within 5 to 10 seconds of listing. So almost instant liquidity. Obviously, the longer you wait, the more competing offers you have, and then sometimes if it's a really good asset, you'll have lenders kind of competing with each other. So they'll see, oh, this person beat my offer, I'll beat that again. So if you wait a little bit longer, you normally get better rates, but you should get a pretty good offer within less than a minute. But again, because it's a market force kind of driving the value of the loans and the APRs that you're paying on these loans, we have no idea what the actual value of the asset is. We just execute the agreement between the borrower and the lender, and then it's a fixed loan, fixed interest, fixed period loan. So we don't keep track of market fluctuations and auto liquidate, which I think is very important for collectors that don't want to, there is some kind of market drop and all of a sudden the value of this thing drops. They don't want to be auto liquidated, because we often actually see borrowers repay loans where the loan value is higher than the floor price of that collection at the time, because they just don't want to lose the asset. They've got an emotional attachment to it, or it's very rare and they're not sure that they'll ever be able to buy it back again. So often we see people paying back. So that's kind of, so we're kind of neutral about why something has value, as long as the lender's willing to take these loans on them. But all those other factors that you talk about come into play in the lender's decision-making process. So I think profile picture projects. So the three broad categories that really have traction with us are metaverse land, profile picture projects, like Bored Ape Yacht Club, Doodles, Moonbirds, and then the generative art, really, or one-of-one arts. But one-of-one art is a little bit less, just because they're generally more illiquid than the generative art, where there's multiple items in the series. So, and yes, all of those factors that you spoke about make a difference. Most important, I would say, is historical significance. So, autoglyphs are the first fully on-chain generative artwork in the world. So they're super valuable, and there's only 512 of them. So edition size also becomes quite important in the actual value of the asset. And then yes, like what are the other historical significant ones? So after autoglyphs, the next big thing that came along was art blocks, and it was the first project, it was the first platform that allowed artists to upload JavaScript on chain to produce the artwork. Autoglyphs would produce fully in Solidity code. So art blocks allow you to upload some JavaScript, and then the JavaScript is what actually generates the artwork. And the first project there was Chromie Squiggles by Snowfro. He was the founder of art blocks, and that's another one of those the ones that really kept their value. Floor price was just before the crash was around about 4 Ether, I think. As I think it's about 8, 9 now, maybe even more, 11 probably. Like it hit 11, 12 for a bit. I'm not sure where it is right now. So they're like historically significant. And then there was a few, like a lot of the early series, as all of a sudden floor prices have gone up now again. So Genesis was one. They're the first very strong visual one that kind of hit like mass attention in the collector space was like Ringers and then Fidenzas, and these were the visually really strong pieces that kind of pushed the quality of what you can expect in generative art forward. And so those are really like valuable. And then there's like lots of new like art blocks curated drops happening like every, like they have seasons. And then generally what will happen is actually the ones that, in my eye, seem the like visually strongest collections tend to have the highest value. So I would say less so if art blocks itself didn't like hit a nerve and like get lots of people collecting, then it wouldn't matter that there were good collections inside there, because nobody would know about them. There wouldn't be historically significant art movement. So there is a certain amount of, there needs to be some attention on these things, but then once the category has got attention, mostly quality is what will win out.
I mean, we could, I think, talk about only that now for the next, remaining 30 minutes, but maybe we'll have to do a follow-up. Sure. But, just one or two, quick questions on this. One would be the, do you see like the distribution being sort of a Pareto distribution of, 20% of the works get 80% of the loans, or is it even more drastic than that?
Even more drastic than that. So I would imagine, top 5 projects have done 60% of our loan volume, and that's like Bored Ape Yacht. So we didn't talk about the profile picture ones. I think there's something different there. So those are capturing like cultural movements and momentum, and then you need to get this escape velocity almost in the number of people who own them and who believe in them. So Yuga have been just phenomenal at that. So Bored Apes, Mutant Apes, Other Deeds, Bored Ape Kennel Club, they're kind of all in the top 10, top 11. I think Other Deeds is number 11 on our platform. CryptoPunks are a little bit weird. Like they're a profile picture project, but they're also an artwork. I would say I would classify them more as art than profile picture. Like, Yuga will have to do stuff with Bored Apes to keep the value going. They have to keep delivering. CryptoPunks will always be CryptoPunks. So they can just do nothing with them and they'll still have value.
There's no Discord. I don't know if there's a Discord access even, but not like this. What at one point felt like a very generic kind of like 5 bullet point deliverables, right? Like you will get access to this and that, and then this, and then we'll airdrop this, and CryptoPunk is just very purist in a way, which I personally always liked a lot.
Yeah, exactly. And like I said, the original intent of CryptoPunks wasn't to be a profile picture project. It was an art project that worked well as a profile picture, and then people tried to kind of build other projects that copy the 10,000 editions. Was it something that you could use on like as an avatar? So So that's another reason CryptoPunks will always be historically significant, because every other profile picture project was inspired by them and is in some way a copy of them. So yeah, so those are slightly different. And then yeah, very concentrated on the upper end of the market. I would say there were like two waves. The first wave was really CryptoPunks, Bored Apes, autoglyphs, art blocks. And then the second wave, you like what I put in there, it would be things like Moonbirds, Doodles, World of Women, like a few other ones, right? So Azuki would also be in there, and then maybe the second wave of art blocks, artworks, and that kind of really started getting traction. And then I think we'll see these kind of progressive waves of new assets making that jump from highly speculative to investable.
Unfortunately, not my do-or-die it seems. But I mean, let me play devil's advocate now for a second. I saw that you posted on Twitter, a question around like, what do people use these loans for? As a polling question, and I'm not sure how representative the result on Twitter is to the actual use case on your platform, but the number one answer was to buy more NFTs to flip with 42%. I mean, how is this not a kind of a house of cards? If you use an underlying asset to get a loan, to buy another asset with the sole intent of flipping it to somebody else who would, be willing to pay more for that asset, who may as well take out another loan to buy that asset for that higher price.
Yes. Well, I mean, so if you think about how does a property portfolio work, right? Like you buy some capital assets that you then leverage to free up some liquidity so that you can buy more capital assets to either flip or kind of add to your rental book. Like, okay, there's difference there is that it's easy to get yield on those things. I think over the long run, you'll see more NFTs.
And it's, sorry to interrupt, but it's obviously also, there is an inherent, need on the Maslow's hierarchy of needs, pretty much like the second, layer of you need a place to stay.
Yeah. That's very true. But again, like I think the art stuff, especially, art maintains value. Like if you own a Picasso, you're probably not going to sell that Picasso. You'd much rather take out a loan from the bank on that Picasso. In the traditional art and collectibles world, you've seen kind of a between 15 and 20% penetration rate in the number of artworks that are, or the value of artworks in existence and the value being collateralized. So this is very common in like other capital assets that have, some kind of value. And really all you're doing is you're acquiring wealth that's represented in these assets. Now, are these specific NFTs going to be valuable over the long run? Lots of kind of questions around that. I think art is less dangerous because it's either good art is not either historically significant or it's not. Most of it is fully, or like if it's fully on chain, there's no external dependencies and you don't need to rely on a team to execute, right? Like it's done, it's finished. So I think they're the safest bet in the space. I think certain PFP projects have just reached a momentum in terms of cultural kind of significance that they'll probably keep going, but there's still more execution risk in there. And so again, from a platform perspective, what are we thinking of? Like, so we believe that over time, there will be valuable digital assets, right? NFTs can literally be anything. NFT just means non-fungible token. And so if you look at the actual code in the ERC 721 specification, it really is just a unique digital thing, right? And then that thing can be anything, and you can associate whatever other kind of functionality or use cases that you want with that. So we believe that this is going to be a large part of how we build Web3. The way I kind of frame it is that cryptocurrencies are the units in which we value things, and NFTs represent the digital things we value. right? So up until recently, and that's another reason I think you see this disconnect between crypto prices and how NFTs are holding up, because up until NFTs became a thing, so really up until 2020, 2021 even probably is like when it really started like having a significant amount of value. Up until then, the only thing you can really do with crypto in a crypto native way was speculate. That was it, right? Like the prices are going up, you're getting some yield, but if you ever wanted to do anything with that crypto, you had to sell it to buy a house, right? Or even if you could pay for the house in crypto, you're still exiting the crypto system and going into the real world. But now, for the first time, there's actual things and ownership and property rights that are crypto native that you can spend that crypto on. And that's kind of what I see, that becoming an economy all on its own. And there's many examples in game economies where these assets build real value, and you couldn't even own those things, right? So now imagine that you actually can in the long run. So that's our thesis. That there's going to be value in represented in digital assets, in unique digital assets, and where there's value, there's finance, and we want to be that financial layer for this value.
And you also want this, full decentralization, and not being, a middleman who analyzes, for example, the reason for the loan, whether this is somebody who wants to flip or invest long term. Because if everybody were to invest more long term, it would probably make the space more robust and ultimately grow the space in a favorable way. But I understand also that it would be somewhat against, the ideology and ethos of crypto itself, if you
Yeah,
were to make these decisions, also
well,
around like which NFTs to accept, because you were saying in
yes.
the end it is a marketplace, anybody can use any asset or any NFT they like, but maybe you as a platform would be able to gather enough data over time to see that a CryptoPunk or an autoglyph is actually a stable asset, and a great collateral for a loan. But maybe the next sports team, well, they probably are also pretty stable, but XYZ celebrity creating a PFP Discord community is not a good collateral, because it may only be hyped for a few months or a year.
Yeah, look, okay, so a few points to make there. So first of all, leverage in itself isn't good or bad, right? And so I kind of see it as a knife. That you can use that to cut your steak, or you can use a scalpel to fix someone, or you could use a knife to kill someone, right? Like the concept of having a sharp edge on a piece of metal is not good or bad. How you use it is either good or bad. So that's the first thing. The second thing is all of our loans are over collateralized, and we can't, so the only thing you can lose in that loan is the picture of the cat that you used in the loan, right? Like we can't go after your house or go after your other crypto holdings. It's contained, right? So it's not as easy to kind of like get into a real bad problem unless you're just doing things that are irresponsible. And I do think it's also our responsibility and something that we're really paying attention on in the future, and like how to educate people on how to use leverage safely. So that's the first one. So I don't think leverage in itself is a good or a bad thing. It's just, it's a tool that people can use to enhance their financial life. Like I give you a great example. A lot of people who bought Bored Apes bought them for 1 or 2 ether, right? And now they're 70 or 80, 100 ether. So it's a large portion of their actual wealth is now locked up in this asset. And either they have to sell it and then exit the community, which they don't want to, and they're paying a lot of tax on it then. But ideally, they want to be able to do something with that asset and make use of this capital that they've now acquired. So I think that's generally a good thing for most people. And then the other thing you talked about is like, us deciding which things are good collateral and which are not. We do some vetting. So the projects have to be approved to be used as collateral on our platform.
Mm-hmm.
So main reason we do that is we want to make sure that somebody doesn't try to create a fake CryptoPunk project where it looks like a CryptoPunk and then it gets, people like the lenders get ripped off. So that's the first thing. And the second thing we do also look at is it just doesn't make sense to do loans on something that's worth less than, say, half an ether, just because of the cost of doing a transaction on Ethereum. We also want to make sure that the project has enough secondary volume so that if the lenders actually like get a default, they can get rid of this asset. So there are some things we look at, what is the floor price? Has the project been around for a little while? Is there good secondary volume? And those are kind of indicators to us that says, okay, this might be good collateral, which we then, and then we'll list those assets. And then typically the way these things will start is that it'll be people in the community lending to other people in the community. And this gives the project some time to build up a loan history that then makes it more and more attractive eventually for more professional lenders to come in and kind of really bring the APRs on those assets down. In the beginning, it's quite high risk, quite kind of very retail focused. The more these assets prove themselves as being good, like investable collateral, the more professional guys with more resources come in and really start kind of competing to get access to those assets. And then the last thing around data, again, what we do is we just make that data available. So we're doing a release in the next couple of weeks, which will basically make all of that information available on platform. So you can see, what's the loan volume for this specific collection, what's the default rate for this collection, what's the average APR. There's a Dune dashboard that we have that you can look at to see those things. But we make it easier for people to access.
And the loan to value, is that, do you fix that on the platform, or is that also determined by?
It's market forces, because we don't know what the value is, so we can't actually determine the loan to value, right? But typically, if you're doing around 30, so it varies between 30 and 70%. And then the APR also varies depending on where you are on that thing, and it also in that range, and then also varies by project. So, if you're doing a 30% loan to value ratio loan on a CryptoPunk, you'll probably get 10% APR. If you're doing a 70% loan to value ratio on a new project that's not got the history of a CryptoPunk, you're paying way more, because those borrowers, those lenders are taking on way more risk there. Like a good example is Bored Apes. So the overall platform default rate is 9%. If by volume, is a little bit higher if you do by loan count. So lower value loans are more likely to get defaulted, mostly because lower value assets are more volatile. But so the overall platform default rate's about between 9 and 11%. Default rate on Bored Apes is 1.4%, right? So this is a very, so you can't just lump NFTs together as one thing. Each asset is as different as different companies.
And so you see already aggregators also, like kind of professional lenders building portfolios on your platform?
Yeah, so a lot of the volume is also, so retail, it's much more like a fat tail distribution. So there's a few people that are just very active, and then lots of people that take out loans every now and then as they need something. Sometimes it's for real world uses, sometimes it's, they just, like you said, there's a drop coming, they want to kind of get in on and flip. So that's much more kind of fat tail distribution. And then on the lender side, it's very competitive. You really need to know what you're doing. You need to know how to value these assets. So we're seeing, a few big lenders building quite sophisticated API integrations with us, with AI models to value these assets. Building, like, there's the protocol called MetaStreet that's actually, built a whole protocol that buys up our loans and tranches them up and sells them, and they've got like a pricing model in there too. So it becomes really sophisticated on the lender side, on the upper end of the market.
Fascinating. And you already mentioned NFTs being kind of quoted in ETH predominantly. Do you see this continuing, or do you see, actual layer ones, as contenders that we will see more of in the future? I hear a lot of the generative artists are starting out now on Tezos.
Yeah, so there's being on Ethereum is almost a mark of quality because it's expensive to deploy on Ethereum. So there is a little bit of a the high value, high quality assets tend to be on Ethereum. The crazy experimenters tend to be on Tezos. The games tend to be on Solana. Sports and existing IP tends to be on Flow. So you're kind of seeing this like market kind of or like splitting up and kind of finding the blockchain that suits it the best. It could all change, so for example, Doodles 2 will probably launch onto Flow, so that'll be the first kind of real big PFP project on Flow. So maybe that changes over time. But I kind of see for a while at least the real high value super assets that you really, if you're spending $1 million on a piece of artwork, you want it to be in the safest chain that you have, where there's the least risk that the chain kind of goes away. As these other L1s build up, like a little bit more kind of a track record and, show that they're here for the long run, maybe you'll see some stuff moving onto there. And I suspect what will also probably happen is some of the artists that started out on Tezos will start building a following, will then release, a higher value collection that kind of like catches the eye of collectors on Ethereum, which will then bring up the value of the other work, as they become more like household names in terms of, recognizability in the art space. Not quite sure how that's going to work for PFPs and games. I think that's like the dynamics are very different in those categories. I think it's also things people should just, NFTs aren't just one thing anymore. It's like trying to think about Amazon and Facebook by saying, well, all these web page companies, right? Like they're completely different, right? They're not even the same category. The things that drive value and what they need and how the market behaves is completely different. And you'll see more and more of that happening. It's just very different in the gaming space to the art space to the profile picture space.
And the NFT finance space, obviously includes many other things as well: synthetics, insurance, rentals, fractions. What other area are you particularly excited about in the space?
Yes, so I think like all those ones that you mentioned, like fractions are a little bit complicated because then it becomes a security. So there's like a lot of legislation in that space. I do think though that over time, in the same way that you have like the Robinhoods and so on to kind of buy fractional shares, I suspect you're going to have, the CryptoPunk collection on Robinhood eventually, and people can buy fractions of CryptoPunks and buy and sell them. Collectors don't like fractions just because you can't actually do anything with the artwork. It's not really yours. So I think there's always going to be, majority of the assets are always going to be owned by individual collectors, but I think some portion of them will be fractionalized. Insurance is interesting, put options, call options. I think that got some legs. We're seeing more and more professional people in the collecting space. So big collectors who have a hedge fund background, like starting to run more sophisticated strategies, hedging their risk and so on. So I think, in the same way that you've got financial assets and you've got tools that fit around financial assets, like stocks and bonds and all this kind of stuff, you also have this whole economy in the real world that's around housing and and art and all of so that there's this whole financial infrastructure around that. And in the same way that you have DeFi that's competing with Wall Street, you're going to have DeFi that's competing with the mortgage providers and so on. So there's going to be NFT focused DeFi and there's going to be money focused DeFi. So I think everything that you see in the real world and lots of esoteric things that you couldn't do in the real world just because you don't have programmable, you've got programmable property rights really, right? Now with NFTs. So there's going to be products that we can't even think of right now, but also everything that you can do with, real assets in the real world will become, trade financing, like there's a centrifuges doing that already. So yeah, the design space is just endless.
And what would you tell a designer or an artist? And I'm sure you've met some, if not, come to Germany, because that may be a particularly German trait. Who say, no, art, shouldn't be so financialized, and this financialization of everything, um, is not what, they may be personally, as maybe very talented and inspiring artists kind of want to engage with.
Well, I mean, traditional art is financialized. You can, 15 to 20% of all traditional art is being like used as collateral at the moment, right, in terms of value. So first of all, like saying that this is a new thing is just, it's not true. Secondly, the best blockchain art, the economics of the artwork is part of the artwork. So, for example, there's an artist called Def Beef who makes these, it's like, I think of them as almost like musical instruments represented as NFTs. So he writes a C program that produces specific sounds. The owner of the NFT can program the tune that this thing plays. But he's got one series of work where every time it gets sold or transferred, the quality of the audio being produced degrades. Right. So it's using this idea of being able to track the ownership history of something as part of the artwork. So I'd encourage people to think about, well, how can you use economics as part of the message that you're trying to do and like express in your artwork? And then second of all is, these artists, like, if they want to earn a living as an artist, they have to sell that piece of work, which means they financialize it, right? Like as soon as you try put a price on the artwork that you made, you're putting a price on it. But what happens in the traditional art world is you sell it for some price, then the collectors make it super popular and they sell it for 100x what you got it for, and you get none of that. In the NFT space, you get secondary royalties every time that piece gets sold. So I mean, I can understand some people don't want to think about the money and something it's not interesting to them, and that's fine. But I think just be careful about just writing it all off, because there's a lot of good that comes from it to the artist, and you can earn a living. It's easier to earn a living as an artist where you're selling your work on the blockchain than it is to earn a living as an artist who doesn't, just because you've got the secondary royalty stream coming in all the time.
So now we're getting to the final section, Stephen. Just two more questions. So one is actually the only question so far that I've been asking everybody who comes on the podcast, and it's around pivoting, which obviously, is a major, slang word, a major, stereotype around, startup life and the life of an entrepreneur. Often we have to make a decision around, are we on a steady course? Should we continue despite kind of the stormy waters around, or should we really do a drastic detour and take a big kind of step function change, and pivot our business or our product? Have you been confronted with that type of decision? And if so, how did you go about kind of answering this for yourself?
For us, actually not. I mean, it's a very unusual story in that we hit product market fit with our MVP, right? So we released the first version of it, and then like I didn't write any more code for the next 9 months because we were just growing so fast that I basically just had to kind of fix bugs and like figure out how to do customer support and all of this other stuff. So very unusual. I think normally you would have to be pivoting all the time. And so having said that, now that we've got an audience, like I'm constantly changing my mind about what's next based on like what people are telling me, right? So I think pivoting maybe sounds like a crazy, like huge thing, but really you should be listening all the time to your customers. And I speak to people who use our platform every single day. So some, maybe like some of the changes in direction that we're making doesn't feel like a big pivot because we're constantly kind of shifting to kind of make sure that we match what people are telling us in the market. And And then sometimes you bolt it down along like a certain way, and then you kind of learn something new all of a sudden. And then you kind of make a sharp turn. But I think it's all just degrees of what you need to do when building product anyway. Like you constantly have to be adjusting your worldview based on the evidence that you're seeing in the market.
Speaking of market, this leads me to my almost my last question. I'll let you go in 2 minutes. I hope you can go over time for these 2 minutes. So what's your take on the market itself? And you know, you've worked in asset management before. Like how do you see the crypto? Or let's start, even one kind of layer down. Like how do you see NFTs correlate with the broader crypto market? And the broader crypto market correlate with other assets, such as maybe technology stocks or growth stocks or, other investment assets out there?
Yeah, so, I mean, if let's maybe start with crypto assets, they're long duration assets. So probably growth stocks are kind of the closest, right? So, and interest rates and liquidity are like the real things that kind of like drive the price there, right? So the longer the duration of the asset, the more you discount its value based on like future expected inflation, right? So as inflation goes up, the future, like the current value of the asset in the future like comes down. So it's not surprising that crypto doesn't do great when interest rates are going super high. And then secondly, when there's excess liquidity in the market, you have to buy something with those assets. So with that money, you tend to buy hard assets, right? Because you want to kind of, so I would rather say that crypto is an inflation against like money supply going up, and inflation caused by the debasement of the currency. Inflation caused by demand shocks or supply shocks, I don't think is that that it's that great of a hedge against that, and you can kind of see it in the actual markets. And then second of all, like, how do I feel about this? Like, I mean, this is the third time I've seen 80% drop in my crypto portfolio. I don't even notice it anymore. I just make, like, only thing I'm upset with myself on is that I didn't put more money aside to buy more stuff now. Like if you investing in crypto, you should have a 5 to 10 year horizon. It's very clear by looking at the data that you should be expecting 70 to 80% drawdowns, over the course of, roughly every 4 to 5 years. So this is exactly what I expected. Is part of, but my underlying thesis around, are crypto networks going to be a major part of how the world works in 15 to 20 years? Nothing I've seen has changed my mind on that. The price fluctuations in between are kind of irrelevant unless, I don't trade. So, like, it just stresses me out too much. I just buy, and I like know in 10 years time it's going to be worth more than I bought this for. And that's kind of how I think about it. And then NFTs, I think if you've got really good taste and you really know what you're doing, I'd like to say it's a leveraged bet on Ether. So if you bought CryptoPunks, like for 2 Ether, like, when we started, you could have bought an autoglyph for 2.5 Ether. It's around about like exactly when we started, kind of, so, June-ish in 2020. Now the floor price on them is 300 Ether, right? So, and that hasn't gone down, right? Obviously the dollar value is like a lot lower, but I mean, back then I think Ether was $300, right? So you're still doing pretty well. So I'd say if you really know what you're doing and you can afford to buy assets that are very clearly kind of blue chips, that are really proven their value, or you're very smart and you really know the space, and you can spot some of those things early, it's a good leveraged bet. But often my friends ask me, well, which NFT should I buy? I say, well, unless you got $100,000 or you spend every day researching this and you're buying 100 different NFTs, don't, because it's really, they're super illiquid, they're very high risk. But the best collectors, really have an opportunity to have like a leveraged bet on the Ethereum ecosystem. And then as these kind of things develop in the different other kind of L1s, in different verticals, you know, there's opportunities in that space too. It's like for me myself, because I know art, I think I've got a bit of an edge in the art space. I wouldn't go buy gaming assets because I just don't have enough time to play games to know what I'm doing. So yeah, that's kind of how I see it.
So then finally, you mentioned you were looking into it, but you didn't get around to buying any. Like what would have been one maybe that really warms your heart, you know, both, you know, as a collector, but also as an investment?
So I remember, well, so first of all, I was looking at Bored Apes at 4 Ether and saying, oh, this is crazy, you know, because I think CryptoPunks were 11 or 12 Ether at the time. It's like, there's no way these Bored Apes are worth like half a CryptoPunk. There's no way I'm buying this. And, you know, like what's the floor on them now? 80 or 90 Ether. So that one hurts a little bit. And then like art that I would love to own that I missed when I also saw them for very cheap prices and didn't buy would be a Fidenza by Tyler Hobbs. It's an Art Blocks project. There's a project called Ringers, also on Art Blocks that I wish I bought. I actually got a Hackatao and also a Xcopy in a default on NFTfi, and then I sold for 2 Ether, and like that thing is probably worth 40 or 50 Ether now. So there's a few things that I'm like sad I missed, but then at the same time, there's a lot of great new projects launching on Art Blocks. There's a lot of competitors to Art Blocks launching. So I'm just like now buying things that I like because I like them. And then maybe they'll become worth something, maybe they don't. But I really want to kind of own a part of the history of this movement, you know. So I've got a founder CryptoKitty, which is CryptoKitty number 72. So it's like the 72nd ERC 721 that was made. I mean, there's no liquidity on them, they're not really worth anything, but it's just I want to own, you know, like these moments in history that kind of like of this movement that we're kind of a part of.
Why are they not worth anything? The crypto.
I think this is like 2 million CryptoKitties, and Dapper Labs have just not done anything with them. So there's no hype around them. I think maybe over the long run, founder CryptoKitties will pick up some value again. But again, to me, it's like that's kind of not why I own it. Like it's more that it's, you know, CryptoKitties started this whole thing. And then there's also just after, so CryptoKitty from like 100 to 130, I think, this type called a Furlan. And I've got one of those too. And those you couldn't buy originally. They were given to community members by the Dapper Labs team for just as a thank you for helping kind of, you know, in the early days of the project. So that for me is also something that's got like a bit of a historical significance and moments in there. I've got a Chromie Squiggle because it's the first project on Art Blocks by and it was by Snowfro, who's the founder. So those kind of things I really like. And then others also just things that I just find visually appealing, that I like the look of, that speak to me.
Thank you so much, Stephen, for spending this time with us. It's very exciting what you're building. I wish you the best of luck with it, and hopefully we'll get to talk again, maybe at one of our conferences if they
I would love to
come back next year. Yeah, cool.
Yeah, it was a lot of fun. I really enjoyed talking to you.
Thanks, Stephen.
All right.
Cool, man. Yeah, where's your general base? Do you have one, or are you kind of?
I'm migrating between Norway and Cape Town. So we spend 9 months of the year in Cape Town, 3 months of the year, maybe a little bit more here in Norway. My girlfriend's parents are here, and then my parents are in Cape Town. So we kind of hop between the two, and the weather's a bit better in Cape Town, so we spend more time there.
Nice, cool. Well, yeah, hopefully get to meet you sometime and see you at the conference. Thanks so much, Stephen.
Yeah, I would love to. Thanks for having me.
All the best, huh? Take care, man.
All right,
bye.
Cheers. Bye.